What's up, everybody? Michael Silva here. You're watching the Daily Stock Market Brief. In yesterday's video, what did we talk about? Well, we talked about two different ways to interpret what was going on in the markets. You can look at it as a breakout and then play the breakout. And we were talking about how if it does break out, shorts are going to have to cover. It's going to increase the amount of buying. You'll probably see more volume come into the markets. And then we also said to potentially look for some sort of potential blow-off top that could happen here in the very near future. As you can see, all-time market highs just progressively moving forward. So in today's market brief, it's going to be a little bit different. We're going to go over the indices quickly, but then we're going to start looking for some trading setups to play this momentum if it does continue. And in order to do that, we're going to be looking at some stocks that have some volume kind of pouring into them. Some are unusual amounts of volume. Some are, just good technical setup. So we're going to be going over all of that in today's video. Without further ado, let's just go ahead and get into it. All right, welcome back. Okay, first thing that I want to point out is we're just going over one indicator today, and that's the BPSPX. Why are we doing that? Well, because nothing's really red flagging to me at this particular point in time. But I did want to show you this one because this has been dripping lower and lower. You can see it here. You can see it here on the RSI. If you're not familiar with what the BPSPX is, this is the S&P 500 bullish percent index. And quickly, what this means is when you see the number over here, it says 75.20, it means 75% of the stocks within the S&P 500 are on buy signals, bullish, okay, buy signals based off of point and figure charts. Now, why am I talking about this? Why this has been diverging and coming down and down and down. The market has been going higher and higher and higher, all-time market high, right? We closed at 3803 today. So why am I bringing this up? Well, I'll be getting into the technical portion here in a second, but if we start breaking through this little RSI trend line, and even over here, we can have a very aggressive squeeze that can bring the market even higher. So I started to see its little head poke out today of this RSI. Now, that doesn't necessarily mean it's going to happen for sure, but this is kind of why I'm doing the market brief a little bit differently here, because if this does start ripping back up to an overbought area, then we could start looking at different positions. But I want to make sure we're looking at individual stocks that can benefit from if this were to actually, just jump right up to the overbought reading in the RSI. So let's go into the indices here very quickly. S&P 500, the SPX. Look, just watch this trend line. It goes ping, 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 ping. And we broke out of that area. We saw a very strong day today, up 1.48%. Things are looking bullish as of right now. What have we been talking about? The Bollinger Bands contracting, and that foreshadows a volatility spike. And not volatility as perspective to the VIX, where if the VIX goes up, the S&P 500 goes down. This is a Bollinger Band squeeze. So what we're seeing here was contracted bands. And if they stay contracted for a while, they foreshadow potential big move. And then what you could do is map out resistance. And then if it does break, that can indicate that we're going to have that squeeze. You can see on balance volume upticking right here. You have the uptick right here in the Bollinger Band width. You can see it visually right here as well. So sometimes these squeezes can be pretty aggressive. And if it does want to continue, if the market wants to continue moving up, we can start looking at 4,000 potentially as its next kind of barrier to entry, just as a round psychological number. But we'll get more into those details in the near future. NASDAQ 100, big day today as well, closed at an all-time high. Now, the technology sector was the best sector today, I believe. I don't have it in front of me right now, but I'm pretty sure that the tech sector was the best, up 2.51%. Just watch this trend line up here as an area of resistance because that has not been broken yet, and it has a little tiny divergence, and you can see the money flow index still not really supporting the move as of right now. But right as we're speaking, we had a big huge gap up, and it pretty much ramped up throughout the rest of the day. IWM, this is the relentless one that just keeps on wanting to just jam up higher. It's completely vertical in just a couple of days, from around 192, and we're up here above 200. So it's just some crazy moves happening on a negative divergence, but we have a little bullish crossover taking place right here. Let's be careful with what's going on, because we always have to still be very aware and not become complacent at the current extensions. And when I'm telling you about extensions, if you look at the long-term charts and if you watch all my other briefs, I point out those key levels that we're extending past. And we got the Dow Jones right here. Watch this lower trend line because it seems to be a technical one that we bounce right off of. The 20 period moving average has been holding. The PPO oscillator did just turn up. That's a bullish crossover. A little bit of a shooting star type candle, but not that long of an upper wick. So nothing to worry about, but it is trading on the upper portion of the Bollinger Band. We're outside of the upper Bollinger Bands. The Bollinger Bands have been tightly contracted, like I've been saying. And now we're starting to see it foreshadow that squeeze, and we're seeing the squeeze to the upside as of right now. Is it a head fake? Maybe, but it seems like, any news is good news right now in the markets. So we're continuing this little ramp up here. All right, let's get into it. We're going to talk about trading ideas. So I'm going to go over some 30-minute time frames on the indices, just to give you some key levels to watch out for if you're trading individual stocks. Because, for example, if you're going long on a specific stock that I mentioned, or any stock that you're trading, and the S&P 500 might be, breaking down from a level of support or running into an area of resistance, it might not be specifically the best time to enter that specific trade. So we're going to start with the indices first, and then we're going to move ourselves down through the rest of the charts. All right. S&P 500 first. We're looking at the SPY on the 30-minute time frame, subtle divergence. All these green little lines going through the screen, those are areas of support. And how can I measure that? Well, previous support, then became resistance, then it became support. So 367.50, let's just call it, I'm rounding right here. That would be an area of support. Price action's pretty darn far away from that. So, it might not reach down there in a day. It could, because we've seen aggressive moves to the downside. The next one, right here, resistance, we squeezed above it, broke down, and we tested back over here as support. So resistance then became support. And then right here, resistance, pulled back a little bit, and then this is just the most recent level of support. I wouldn't put too much weight on this specific level. The gray box is a gap. So how do you play this? Okay, first off, if you do trade the SPY, what you can do is look at these key levels and then play them accordingly. So for example, if we gap up tomorrow, which has been kind of the theme as of recent, we've been gapping up, and then if you look for a pullback into an area of support, that can offer up a good opportunity for you. So for example, right here, when I was on Twitter, let me see if I got a screenshot. I'll post a screenshot up, but when it was right here, I notified everybody saying, okay, look at the RSI, the 30-minute time frames, these indices are very overbought. Shortly after, I started seeing these long lower wick candles form right here. This is when all the news about the capital was going on, okay? So then I said, okay, watch the hammer candles forming. Look where they were forming, right around an area of prior resistance. And what did we see happen today? Well, we got that big gap up and boom, rallied, and then kind of just camped out here, kind of creating somewhat of a little flag pattern. So if we, gap down tomorrow, look for these areas if you want to buy the specific dips, have entry orders by the support and then stop losses below it. And if it gets just stopped out, you can just go to the next one and so forth. So it's just an easy way to trade, but you need to know these key levels, especially if it comes to playing profit. So for example, if we open up here tomorrow, or say if we open up here and it breaks down, and then I'm like, okay, I'll enter in right here. I'll give it a shot. This is the gap window, boom, and I'll have a stop loss there. Say if it bounces up and starts moving, how do you know when to take profits? Well, if this support was support here, and then we broke down through it, support then becomes the level of resistance. So 378, I would be scaling profits up into that level. Okay, I hope that makes sense. Russell 2000, negative divergence. Here are the areas of support that I'll be looking at. We have a couple of gaps right here. So for example, if we do get below these levels, this can offer up a good opportunity to potentially play a bounce. Make sure you have a stop loss in place, and even down this route too as well. Be careful in these environments. Like I said, the market is one, like we get lucky sometimes where you get a gap and then it follows through with just relentless move higher. But sometimes when we get a gap down, you got to map out these key levels of support, because these gap downs, typically a bearish thing, aren't getting follow through to the downside. They're getting bid right back up almost immediately. So these are the levels that I'm looking at, 197.50, 204.50, and then I got just 206.50 to 207, this level right here. So it's really going to determine where the market opens. But you can come back. I'm going to post the chart deck in my website on this specific video. And then we have the DIA. This is the Dow Jones Industrial Average. Got a gap down here, a couple levels of support, right? We got one at 309. It can pretty much be spread down to 308.50. That was where the gap from today started. We gapped from yesterday up into through about 310, and then we pulled back into this little level, finding support. That's where the gap now kind of just is traveling. And then we also have one at 305. You can see it was resistance, 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 little tiny squeeze over, resistance. And then when we finally broke above it confidently, the market really just started ramping and rallying at that point. All right, so those are the three indices. Those are kind of the levels that I'll be watching tomorrow and potentially longer. We'll just to see, how the market really plays out. But now let's get into some stocks. I'm going to go over 1, 2, 3, 4, 5, 6, 7 stocks really quick, okay? Snow. Okay, this has been a popular one since it's IPO'd, right? It's all just a lot of headlines around it. And it's been going sideways really since this IPO. But what I want to call out here is this kind of falling wedge pattern and then this previous candle that formed. So it's up 13% for the day. Pretty strong day, I'd say. And then we broke out of 1, 2, 3, 4, pretty much 4 to 5 candles right here. So pretty aggressive move to the upside. And as you can see where the price action is at, we closed at 304.20, which is right around this area here, which was prior resistance. So if we break through that resistance, it could squeeze us higher. If this breaks out of this pattern, that's a bullish sign. You see the RSI upticking, and then take a look at the amount of volume that poured into it today. So this could be a potential good play or even a trading play if you want to get into it tomorrow. Just look for confirmations of specific levels, but I like that volume. It looks good so far. Look, if we have a big gap down tomorrow, then I'd say, okay, be careful with that. But as it stands right now, specifically in time, it looks pretty solid. Here's ticker symbol PLTR, symmetrical triangle. I've actually been a fan of this one. I think I posted on my Twitter more mid-December, and it's just kind of rolled down, and it's kind of just been tracking sideways in this just consolidation channel. So we bounced, support, support, support. You can get in pretty much now. It would be fine. Keep in mind we're under the 20-period moving average, so that's not the greatest thing, and we're making lower highs as well as higher lows. But if you think that this is going to break out, what you could do is play a speculation trade where you enter in lower. That's the pro. You get a better entry point, but you might not break out with confirmation. You get a lower entry point, and then you can have a tighter stop loss. Or you patience, plays off big, where you wait for a breakout with good volume, and then you play that specific move to the upside from there. So this is a good setup. I really like this. Here's a pretty just nasty beat up stock here, GBIO, from $56 down to around $23 in a very short period of time. We're on the daily time frame. However, what I want to point out here is that hammer candle that formed at previous resistance, and then it kind of acted as support around in this area. And then the amount of volume that took place today, it's an indecision type candle, okay? So it was a hammer. That's the bouncy type candle right there. Okay, we're bouncing from a pullback. Maybe it's going to be finding support here. So you can do it a couple of ways. You can see where we open up tomorrow and potentially, buy in lower, maybe. Or you play a breakout of this trend line. Because if we break out of this trend line and volume continues to pick up, this can set us up for a nice little ramp up higher where, if you enter in around 25, 26, you might be able to catch, up here by the 50-period moving average up to $32 to $34 per share. So, and that's also right here around this level of resistance, as you can see, and previous support. So around $32. So something to consider here as well. It's not like I said, these are more speculative at this particular point in time. So you need to be careful. There's no solid confirmation yet. Here's ticker symbol SABR. Just pay attention to the flag type pattern that's moving, and we have a kind of a channel that it's in right now. If we start breaking above, the previous high, what was today's high? $12.58. If we can get a confirmation close above that and we start seeing more volume come in, we can see it kind of coming in right here, but it would be nice to see more. That could set us up for a potential another move higher. And if the market continues to press higher, as we were talking about breakouts yesterday, these are some of the stocks that could very well benefit from that. And then we got Nordstrom's. This is JWN. Take note of the negative divergence, all right? And it's not the greatest looking daily candle, but this is a nice flag pattern and a nice consolidation here since pretty much, and late November till the beginning of 2021. And then we broke out. We saw a little bit more of an uptick in volume, not like a huge spike by any means, which would have been nice on a breakout like this, but potentially we might be breaking out, come to back test, and then we potentially might move higher here. So things to consider, right? So we'd want to either one, wait for a pullback to this support, which is right around 32 to 33, have a stop loss below it. And then if we do bounce, that'd be awesome. But you got to make sure you have stop losses in place because you got to, take note of the current negative divergence that's building. But overall, pretty solid looking tight consolidation, and we're breaking out of it. It would be cool if that continued to follow through. Here's CFX. We did break out of this consolidation. This was also a pretty long consolidation, not crazy, but since the same time as Nordstrom's. The breakout did have a huge uptick in volume, or a bigger uptick in volume. Today's candle, we only moved 1%, so it's like an indecision type candle with a lot of volume coming in. So this is actually kind of interesting to me. I like this setup. So you need to be play it very careful. So it depends where we open up tomorrow, but you can have a stop loss below the low of today's candle, which was $40.14. And then you can enter in if we're right above it. And if we start breaking above the high, which is 41, this could really start moving aggressively to the upside. So that'd be a really cool catch. These are high beta stocks. So, be careful because, you can get burned very easily. So make sure you're focusing heavily on risk management. If you look at the axis right here, the y-axis, you can look at 39 and 40. It goes from 39 to 40, in a very short period of time here. And you can see the candles, pretty much extend 38 to 40 or, $1 to $2 per share per candle. So, if you bought 400 shares of this and it just moves very quick from 39 to 440, that's a $400 move. So did I say that right? 400. If you buy 100 shares and it goes from 39 to 40, it's a quick $100 move. So just be very aware of that. And then the last one I want to talk about is VERU, VERU. Look at this, nice solid breakout with good volume right here of this little falling wedge pattern. And now we're kind of seeing it consolidate. This I really like too as well. And we still have a nice little amount of volume. If we start breaking above $9.88, $10 right around there, we can definitely see this thing push up higher probably pretty quickly to the previous all-time high. If it goes past that, even better. But yeah, I like this setup as well. So I hope you guys enjoy today's episode. Just to kind of wrap your thoughts around everything. The reason why I did it differently today and not get into all the nitty gritty stuff for indicators was just one, simply because there wasn't any big red flags other than the BPSBX, which it's something to consider. But now since we're starting to see the market break out of these specific levels, it's going to cause, or can cause, more shorts to cover and more momentum buyers to step in, which means you want to take advantage if you can do so. So hope this helps. This is what I'll be looking at tomorrow during the trading session. Hope you all have a good day. And just so you know, I will be starting to put out more trading videos here in the very, very near future. I am still working on getting that all going. Been a little bit busy at work, so trying to just wrap my head around all these different things going on. All right, everybody, I'll talk to you later.